There we go. Okay, welcome everybody. So today we're going to talk a little bit about joint and designated assets and how those work in e-state and that kind of stuff, and answer any questions you have about that. Let's just see what's going on. Okay. Sorry, I'm going to turn my notifications off so people don't bug me. And there we go. All right. So just to give you the overview, you'll recall, of course, that we have a special ribbon for joint and designated assets here. I'll just clean this up. And for those, I'm just going to start from scratch. So when you open up a scenario, this will be blank. And then if you have somebody that you want to show being designated as a beneficiary or being a joint owner, you'll click the add button, specify the beneficiary who's the joint owner. So in this case, it's Jane, who's the spouse. Then click on the checkbox. If you want to add more than one person, so if it was joint with 3 people, for example, you could add them all in here. So you could go like, it's joint with Jane and Rachel, for example, or Jane and Rachel are the designated beneficiaries. So that's how you can add more than one person as a beneficiary or a joint owner. Let's say for this box, we're going to have just Jane. So this is for any assets where only Jane is the joint owner, is the other joint owner, or only Jane is the designated beneficiary. So then we'll deal with, let's deal first with joint assets. So let's assume, for example, that the home is joint. Now, just remember that just because you make an asset joint in here, in the asset, this country house, for example, is showing as joint here. This doesn't automatically put it into the joint designated assets box because, well, we made that decision to go this route because there was the chance that you might want to show them that we severed the joint tenancy or take an asset that wasn't joint and show them what the impact of making it joint would be. So that's why we don't automatically put this in here. So then we'll go back to that scenario and we'll see the assets, and we remember that the country house is joint. So we're going to drag and drop that asset in there. And again, that will show up here as the joint asset, and it'll show that we've saved some, well, depending on where that asset was, that there might be some probate tax savings. So just as an example, let's just go here for a second. And we've got country house, we've got, what else do we have joint? The home. And so you can just drag and drop those assets in there, and it will take that into account. Let's talk now about designated assets. So let's, obviously the things that you'd include in here are RSPs, TFSA.
Jordan, yep. Quick question. So if you have a joint with Jane and then you have another asset joint with somebody else, how do you do that?
Right, so then you'd go add here, and let's say we have some assets with Blake Smith, okay? So then what you would do is you drag, okay, what asset do you have? You have the country house joint with Blake Smith, and that's how it would work. So you could list these like that. You could have assets that are joint with both Jane and Blake Smith. Here, oops. You could add another person in here, or you could have Jane and Frank, and let's just say the bank account was joint with Jane and Frank. And that's how you would do it. So you can have a whole bunch of things. You could have as well, which I'll show you in a second, but you can designate the estate as the beneficiary of certain things. You wouldn't show that as a joint asset, but as a designated beneficiary. So that's how you deal with joint assets. And then you can see that, you know, depending on what you're doing, there's probate tax savings on those assets. Just interestingly, just want to see. Okay, so that's where that is. Good. So let's go back here, and I'm just going to get rid of these guys just for a second, just to clean things up a little bit. So now designated assets. So what are the things you can put in here? These are only assets that allow you to designate a beneficiary. Life insurance, RSPs, RIFs, TFSAs, LIFs. You wouldn't put things in here that, that are assets that aren't joint or you can't designate a beneficiary on. So for example, RESPs, those are typically, although they show as joint subscribers, they're dealt with in initial gifts. So that's where you sort of deal with RESPs, because technically it's not exactly the same as a designated beneficiary. So TFSAs have Jane as the beneficiary, the RSP as Jane as the beneficiary. And as you go, you'll see that there's continued tax savings and probate tax savings, et cetera, based on these issues. And that's how you designate a beneficiary. And then at least to display it to the client. The next, I don't know if we have okay, let's do life insurance as well. Okay. So there we've dealt with that. You'll see Jane as a subsequent, what about Jane's TFSA subsequent owner? Let me get to that in a second. So in this, that's how you sort of create the gifts to show the clients these designated assets. Then let's talk about the documents that get generated and the language that gets generated. So let's go first to documents, and we'll deal with the single will 1.5. That's the one everyone should be using. We're getting rid of these V1s. So there's a couple of choices that you've got to make here to have them appear. The first is that if you want the designation of registered assets to appear in the will as a designation, then you've got to have that checked off. If it's unchecked, it won't appear even though you've made that change in the portal. Okay. And the second thing is whether you want to include for joint assets a designation confirmation that you say, look, I really mean it when I made these things joint. And I'll just show you how that sort of gets generated. So let me just click on this and show you that, and then I'll show you the life insurance. So here's the document. Hopefully people are seeing that it gets generated a lot faster and they're having good success with that. So here is an example of, and I'll just make it a little bit bigger, of the designation. So we have an RSP and a TFSA. And so it designates Jane as a successor holder of the TFSA since it recognizes that she's the spouse. So that's the language that you'd want. And then she's also the beneficiary of the balance of registered assets. So if you had given, as Charlie had raised, if you'd given one asset designated one person as a beneficiary of one RSP and another person as a beneficiary of another RSP, this wouldn't say the balance of my registered estate, registered assets. It would say the beneficiary of the RSP 1, 2, 3, 4 at TD Bank, or however you named that RSP. But in this case, Jane is the beneficiary of all of the registered assets. eState recognizes that, and that's why it just designates her as the balance, as the beneficiary of the balance of the registered assets, which are all of these. And that's what we've got. So that's how a designated beneficiary designation works in the will. The second part was this confirmation of joint assets. So this just confirms, because we checked it off when we generated it, that it confirms that any assets that we hold jointly with anybody, we intend to have full beneficial ownership of that. So that's
Sorry, with the RESPs, if you are not putting them in as joint assets, would you really only address them in the descendants only section?
I put them in both, because if I make, let me just show you, here's my RESP. So what I typically do is take the RESP, designate, just in case it's not joint with Jane. So I'll put it in there, and then because you'll see it will automatically say if I'm the sole subscriber.
Right.
And in the descendants only, I have the children. Let me just regenerate this document. So I would typically do that just in case I'm wrong about any of those, when the client says, oh, it's joint. Yeah, it's joint. I just want to confirm it. So it will just say, I'm making my spouse as the successor subscriber of any RESP that I'm the sole subscriber of at my death. If they were joint, then that doesn't apply.
Okay, so it just covers that off.
Yeah, it covers that off. So I'll
Okay.
just show you where that shows up here.
Because when it's been joint, I've only been mentioning it for the kids.
Yeah, so, and that's fine, as long as they're not wrong about it. Like that's,
No, I always confirm that
yeah. I just
thing
throw
is-
this in. I wish I could get rid of this. Oh, there we go. I just throw this, by making the spouse the beneficiary in the first scenario, it just says, I'm appointing her as successor subscriber of any plan where I'm the sole subscriber at my death. And then I have this the general one.
Okay, perfect. Thanks.
So that's what I want to show you on that. The other thing I want to show you is what happens if you designate I'm just trying to find it. Sorry, guys. Here it is. So this is a bit tricky. This is one where we haven't quite perfected it, but a situation where you have it, in this case, Rachel Jones is a disabled beneficiary. And so we make Rachel Jones the beneficiary of that RSP because we know that there might be a tax rollover to an RDSP or a lifetime benefits trust, et cetera. And so this is what gets generated by default. And we welcome your comments on this to try to make this a little bit more comprehensive. But because it's tricky, I don't want to have the software drafted and not draft it properly. So what we have is a designation of someone to receive those RRSP benefits as a trustee, and then take them and have them roll those over to an RDSP for the benefit of Rachel Jones. And then the balance not contributed, because of course there are limits on how much you can deposit into an RDSP. It says, okay, then I want you to deal with it in accordance with a paragraph, and probably that's a Henson Trust paragraph. And so we leave that sort of open, but it doesn't yet know that we have a Henson Trust for Rachel, so that's why it can't identify that. But that's what generates. And if people have a better way of dealing with that, I welcome those, and I look to you guys to help us firm that up a little bit. It's a tricky one, and so until I'm satisfied that we can do it right in every case, I prefer that you have to do it manually and make sure that you think through the issues. So so that's how it gets generated for a disabled beneficiary. And there is, of course, the warning when eState sees that you've got a registered plan and you've got a disabled beneficiary, it's going to warn you to say, consider whether the RSP should be designated to permit Rachel Jones to add the RDSP or a lifetime benefits trust. So that's the that's the situation right now. We're working on that whole disabled beneficiary planning to make it better, but again, it's so, of course it can do Henson Trust and all of those things, but I'm a bit concerned until we can make sure that it works perfectly, that we sort of leave it to you guys to use your own expertise on that, on the drafting piece of that. So that's registered plan and designated assets, but I want to show you how life insurance designations work. So I'll go to that. And as you recall here, I'll just talk to you about that just for a second. So in this case, let's just assume that the client says, look, I want my life insurance to go to my spouse with no strings. And if my spouse is not alive, I don't want it to go to my kids, absolutely, because I already have a trust for them because they're young. So I really want it to be dealt with in the same terms as the residue of my estate. So in this case, what you would do is designate the spouse as the beneficiary of the life insurance in the surviving spouse. And then in the other two scenarios, you don't have to designate anybody as the beneficiary of that. And I'll show you what it does. So the life insurance declaration, you can put in the date and the witness and then generate it. And what it's going to do here is it's going to generate a designation of beneficiary to the named beneficiary. So that's the spouse. And now I didn't put in policy names or policy numbers or names of insurance. If you did, it would obviously populate that. So this says this: if my spouse is alive, I want it paid to Jane. If my spouse is not alive, I want it paid to Frank. Now, Frank, if you saw, it named Jane as the sole executor, and then it named Frank. Well, it knows that in this case, Jane is not alive, so it won't name her as the trustee because it knows that under this scenario, Jane would never be alive. So it just picks up the next trustee. And so it says, okay, now if my spouse is not alive, what I want you to do is pay it to Frank as the trustee of that, and then deal with it on the same terms as I've set out in the residue of my estate. Now, if you're doing a secondary will, you might want to just say my same terms as the residue of my secondary will. Or if you're just doing a single will, you delete the word secondary there. And then, so that would, in other words, carry through for all the residuary provisions of the will, and in essence, incorporated by reference. And then we have the idea that the insurance trustee has all the same powers that my trustee has under the will. And that's what we have for an insurance declaration. What we can't yet do, which we're thinking of building in, is this idea that you can divide insurance proceeds, almost like a residue clause. We want to keep the designation of beneficiaries pretty straightforward. But anyway, we're working on a way to do that and not overcomplicate things. So that is how you deal with life insurance declarations as well, and joint and designated assets. So if anybody has questions, I have a few questions for people, but if people have questions, I welcome them. Yeah, why do I use a separate declaration? Mostly because I want to just send it to the insurance company, and I don't want to send the whole will. That's really the main reason. You could put it at the beginning of the will. We don't do that in estate, but yeah, you could do that. It's still technically not part of the will, right? Or else it would be, it's really still in essence, a separate document, although it's in the same, a separate declaration in the same document. But we do it that way, so you can just send that document over to the insurance company. Other questions about joint and designated assets?
Jordy?
Yep.
It's Kit Bennett. So,
hey, Kit.
Hello. So speaking as somebody who's worked in the insurance industry, the one warning that I would give people is life insurance companies, just like other major financial institutions, rely on their reporting software. And as soon as you have what you would call a non-standard designation, so this would be something that might come in, as you said, a standalone declaration. The really scary part is that it has to get, the information has to be put into their reporting system.
Right.
And then you are relying on them to manage to not lose the original declaration.
Right.
So, and it's Jordy's heard me say this for years, because I'm kind of neurotic about stuff like this. I don't ever want a client I work with to be a legal guinea pig. My suggestion is to give consideration to sending a notarial copy of that declaration. So it puts the insurance company on notice.
Mm-hmm.
If you sent them a letter, you can ask them to sign back on the letter and send it in the stamped self-addressed envelope confirming they've updated their records, and hold back the original to be sent when the client dies. So either, if you're not holding all documents for your client, you give it to them and say, put this in safekeeping, maybe with your will, etc. But from a very practical perspective, that's one of those hurdles that lawyers in private practice cannot control. But I'm just telling you, working with policyholder services, as I have done, things have, stuff that gets stored in places goes missing.
Especially if one insurance company takes over another and changes all the So,
Oh,
that-
yeah, yeah. So, and you know, as a courtesy, perhaps if they have an insurance advisor who is the advisor of record for that insurance, ask that they, yeah, lost in space for life costs, exactly. Is to make sure that the insurance advisor is notified. The other thing that you want as a cautionary tale, a lot of life codes, when they get a non-standard declaration, will almost as a matter of course send
Yes.
the client the beneficiary
Yes.
change form and say, here, just complete this.
yeah.
So Jordy, tell everybody why that's maybe not a good idea.
Yeah. So I always warn my clients not to sign another insurance declaration that they send you, because of course the last designation revokes the earlier designation. And they probably don't have all these things. So what I often say to people is, before you sign this designation that appoints, Frank, I think it would appoint Frank Jones as the trustee if the spouse wasn't alive, sign a designation that says Jane first, Frank is the alternate, then send that one back. Then they'll put that into the records, and the records will appear perfectly right to them. They'll feel all good about that. And then you have the client sign this insurance declaration that says, yes, it's the same people, except that Frank Jones is receiving it as a trustee. And that actually revokes the one that you sent to the insurance company, but they don't really know that. And they just pay it out properly. And Frank gets the money as a trustee because that last designation was what is binding on him. So that is a problem
Yes.
in process. But that's a solution. And I say to my clients, please don't sign any designation that they'll send you, because that'll screw everything up. So if you're going to do that, sign that one first so they have the right people on record, and then sign this one, which has the legal effect of saying that Frank is going to be just a trustee of that money when he receives it. So, and there's lots of room for life insurance declaration and making it more comprehensive. So we have that on our list, and we are going to inscript or conscript the expertise of Kit and others to help us with that. Other questions people have, and I then want to just pose some questions to you guys. So,
Sorry, quick
yep,
question.
sure.
It took me a minute to unmute.
Yeah, no problem, no problem.
I was just looking at an estate where there's a non-resident beneficiary, and considering maybe doing a trust, but I don't know if there's automatic wording that would take that into account in the software.
Yeah, so we're actually, is it a US person?
Actually, no, she's in the UK.
Well, yeah, I wouldn't be, yeah, I mean, the software, you could do a trust, whatever terms you want to put in there. There wouldn't be necessarily the UK language in it. What we are going to build, though, is a US version.
Okay.
But yeah, we can't, yeah, I wouldn't be comfortable in putting that in. But maybe they say, oh, just use your, we want a discretionary trust, fully discretionary. And so great. Okay, no problem. That would be just like the one you would draft here. So.
Yeah, and that was going to be my approach, just to make it pay out at the trustee's discretion with like a provision to be able to wind it up if needed, because in case she moves back, and then she can just take the money, right? So. Yeah.
So you would just do it the same, just basically that way. I mean, US planning is slightly different. But yeah, sure.
Okay, thank you.
So there's the issue of graduated rate estates, right? So it's, and some more, probably people know more about this than I, since I'm not a tax person. That's one of the balances that you have in designating, using a life insurance declaration rather than having it flow through the estate. You lose the graduated rate estate, marginal rates if that insurance is a separate trust fund, which it is. We want it to be separate for probate planning, but we don't want it to be separate for income tax. Well, you can't have it both ways. And so you're giving up the GRE status for that, but you're saving on the probate tax. And at some point, and there are calculators out there that have figured out sort of what's the, again, you don't know exactly, but what's the benefit of having it as a GRE versus, we know what the probate tax savings is. What's the benefit of a GRE for those proceeds? And again, it depends on how quickly they get paid out and everything else. So, yes, okay. I was right. The separate insurance trust is a testamentary trust, but not a GRE. Exactly. You can't have more than one. So that's the problem. So let me just tell you what's going on. So you all have probably seen the 1.5 version with all the changes there, and hopefully that's you're finding that to be very helpful. We're working on 1.6, and 1.6 is going to be quite a dramatic change as well. That's going to make it, well, look a bit better, make it a little bit faster, do other things. But while we're doing it, wanted to know from you guys, what, if anything, is holding you guys back from using eState regularly within your firm, if you're not? And you know, is there something that we can do to get people to, and for those of you who are using it, what was holding you back at some point, or what did we overcome? If you wouldn't mind just throwing that out for us, we'd really appreciate it, because you're our real core users, and we'd like to know your experience and what you think we could do to make things easier for people to say, you know what, this is what we're going to use in our estate practice. Anybody want to chime in there?
One thing I've noticed, Jordy, is the lack of help on screen for both the client doing the questionnaire and, aside from the advisor warnings,
Yeah.
you know, just helping entry or typical issues for the lawyer.
Yep. So the questionnaire is one of the things that we're going to actually completely revamp in the fall, to make it just much more user-friendly and basically guided. So we recognize that as an issue for sure. And then we want to build in as well the sort of online, the help as you go through it, like here, okay, do this, do that kind of thing. So we recognize that as well. And Mark, do you feel at this point that that's still sort of needed in for you?
Occasionally, I'm still working through more complex planning, so that's where I have to go back and forth and figure out if I'm addressing stuff that's in the program or not. For the client side, there is it isn't always clear what they have to do next.
Yeah, we recognize that for sure on the client side, and yeah, okay, great, thanks, Mark.
No problem. Thank you.
Anybody else have, and if you don't feel like speaking out now, if you wouldn't mind sending us a note, if we could set up a call with you, or just let us know, you know, because we are finding we have a lot of users. We hit 500 users, but we find that a lot of people are taking a long time to start to adopt eState, and just trying to figure out, you know, as a estates lawyer, just trying to figure out sort of what we could do. Lawyers are not easy to convince, but what we could do, and what do you think? So we really welcome your suggestions on that as members of the profession, and you know, what held you back, and what is still holding you back, if it is, and what we could do to say, you know, okay, this is great, you know, we're going to use it, and we do use it all the time. So if you want to let me know about that, that'd be great. And the last bit of feedback, and you can jump in a second, the last thing is that, as I said, this 1.6, if there are options that are missing in there that you've come across more than once, let's say, or you anticipate coming across more than once. Like one of the examples is, you know, I want to hold the home, let's build in, you know, for a period of time after death, 1 year or 2 years or whatever, as an example. So if there's something missing, an option that's missing from anything, will you let us know that? Because we're doing this big rebuild, and of course we can add it later, but if you let us know of it, that would be great. So, and I know the big one, just so you know, the very biggest one is this idea that you can make a gift over to anybody that you want anytime. So you can divide it into basically like a balance of the estate gift over for assets or those kinds of things. So, yeah, so.
I was
Yes,
just,
I know. Yep, go ahead.
I was just going to say, Jordy, I agree with, I think it was Catherine who just made a comment in chat
Yes, I
about
saw about precedent.
lawyers being wedded to their precedents. But I think if something's holding potential users back, it's just a bit of a learning curve to learn how to use the software. But I think it's well worth the effort to spend the time to learn it. I really do. And my question for you is, do you think in the future, I know you're still refining your product right now here, do you think in the future you'll move into probate?
Yes, that is the idea, that one day we'll be moving it to the estate administration piece as well. That's further down the road because we still have lots to work on the planning side. Yeah, and I think that is certainly on the roadmap for sure. Yeah. So, past tutorials, sure. So we're also working on, we have a new help desk that really is quite great with demos and those kinds of things. We're launching our eState Academy shortly, which will, one of the things it's going to have on there is an annotated will, in essence. So me going through the document and how it gets generated. They're on YouTube, by the way. Any prior tutorials on YouTube, and you'll see we have a YouTube channel. But we're going to have our help desk up, and so yeah, there'll be ways for you to easily access those questions, and also to know sort of, and Mark's point is know what gets generated, based on what you select. So we're working on that, and that's live. So, so with me, not live me, but I'm describing the provisions in there, why we use it, and that kind of thing. So anyway, we appreciate all your support, and if you know of any way to crack through to people, yeah, and lawyers especially, because it is a challenge, and but we're thrilled with the numbers and thrilled with your support. So I can't thank you enough, and we expect it to continue to get better and better for you. So let us know how we can do that. Yeah, that's where we're at. Any final questions or comments, and feel free, please, to email us if you have any suggestions. All right, we're always here for support, so just let us know if we can help. If you get stuck on something, if you're not sure, Mark, for sure, if you get stuck, just flip us an email and or get on the chat, and so thanks everybody, and have a great afternoon, and be well. Okay, bye-bye now.